Yo, what's up, you guys? Welcome back to another weekly market breakdown. We are going to take a look at the dollar index, the Nasdaq, the Dow Jones, gold. We've got Euro JPY as well as GBP JPY from a technical. We're also going to take a look at what fundamental data we got coming through this week, what happened last week. And yes, if you are new here, please head over to the educational section so that you can understand some of the wording that I will be using here, and also do consider subscribing to the channel as well. And also I will be giving you guys a 40% discount on the signal services. I'll leave a discount code in the description below that will be valid up until Sunday. Now, without any further ado, let's jump straight into the information. Now, it's very important that you understand what kind of news events you got coming through, because we know that high impact news normally tends to sick the market, and the last thing you want to do is to be either on the wrong side of the market, or you want to be, or you want to end, or you do not want to enter into the market just before the news comes out. Now, we're going to kick off Tuesday with consumer confidence, basically how consumers are feeling in terms of the economy recovery. Then we've got the ADP, which is the automated data processing, where they basically check how many people was added onto the payroll, within last month. That doesn't mean people got employed. It's just people that was added onto the payroll. They could have been, they could have lost a job throughout there as well. Then we got the PMI, which is the Purchasing Managers Index. Then we've got the JOLTS job openings, which is also surveys that is collected from various private sector companies that gives the Fed's an indication of what we could potentially expect from the NFP. And then we got the most important news, which is the federal funds rate. That's the interest rate, and we expect the Feds to hike interest rates by at least a quarter basis point, which is a 0.7, 0.25, which is going to take it from 4.5 to 4.75. And the reason for this is due to the fact that the CPI data had come through lower. There's still growth in the economy based off the previous, most recent GDP data. So the Feds are not as aggressive with the rate hikes as they were last year in March when they started hiking that 0.75 basis points. We got the FOMC press conference coming through, basically where Powell stands there and they get asked questions about what they think is going to be done with the economy. And then we've got everyone's favorite, which is the NFP, where people believe they know exactly what's going to happen. So that is what we got coming up this week. And it's important for me. The most important data that we are going to be looking out for is the federal FMC data. Now, I'm going to give you two probability setups that you can trade this data with, right? The one is going to be based off what type of data we do receive, because sometimes the Feds like to surprise the market as well. So we're going to start with the dollar index. So we know the dollar index hasn't really been doing anything. I guess the market's waiting for data to be released. We can see I've been speaking about this, and if you just look at the price action that we have on the dollar index, you can see the dollar index had broken below support, came to test it as resistance, but the market really haven't done anything else other than that. We can see here, if you look lower, you can see the market had been stuck here at this level of support as well. Now, this news is definitely something that we will be waiting for, especially the federal funds rate. That's the only data that's going to come out and drive the market higher. Now, I still stand with where I would like to see the dollar correct itself. Now, again, if we do get a clear daily break and close above that, then by all means, like I said before, we can definitely expect this market to continue higher, provided that the Feds does not only stick with their 0.25, but it's going to be important in terms of what Powell is going to say there at the conference in terms of necessary steps that they are going to take to improve the economy. And if it's going to help drive dollar prices higher, then we can expect the dollar to increase in value. Next up, we've got the Nasdaq. The Nasdaq just went for a clearance sale, testing this previous level of daily resistance. I now confirm a correction is expected as we anticipate a deeper continuation in the market as well. Going into next week, I will definitely be looking out. I'll be looking to trade this correction here for the Nasdaq as well. And next up we have got the US30. Now the US30 basically is now trading again in bullish territory. The market had broken above the strong level of support, came back to test it as resistance. I do expect the Dow Jones now to continue higher because normally when you get a candle with like that with a wick, that normally just means we can see an impulse. There you go, impulse correction. Now we do expect that continuation to the upside, so I do expect the Dow Jones to go for a further clearance. And would this be a good place? Yeah, that would probably be a good place to enter because we just broke above previous resistance and is now back to test it as support. I can see we're applying the same price action concept to lower time frames there as well. Next up, we've got gold. Now, gold isn't doing too much. I was expecting gold. As you can see, we have a lot of liquidity wicks where retail traders might have come into the 4-hour or 2-hour time frame and thought that we basically had this closer. Let's check on the 1 hour. Yeah, this was basically the only one, but you can see here it's like a fly catcher. If you look at this here on the 2 hour, so this was basically a fly catcher. You can see over here what I mean when I say a fly catcher, because you can see how the liquidity is being grabbed all around this area because it's a buy, stop loss, buy, stop loss, buy, stop loss, buy, and that's basically how market makers are out there to hunt these stop losses as well. Going back on the daily time frame again, I was hoping to see a clear break below this level because the market had printed resistance, broke above resistance. It's now testing it as support. What I would ideally like to see, it's either a break below this level, a pullback, and then a continuation. The market would then print a head and shoulders pattern that is considered a bearish pattern from a technical perspective. Alternatively, if the news does come out negative for the dollar index, and like I said, we have to monitor that also, but if the news does come out negative, then we can expect gold to continue higher. Again, I will keep you guys up to date with that as well. Now, Euro JPY is quite confusing because just by looking at the chart, the liquidity sits to the upside for Euro JPY on the daily, but if you scroll down to lower time frames, you see that, okay, that's my bad. I have to apologize. But we can see how the liquidity sits to the... No, I think I had this wrong. So if you look at Euro JPY, because I traded GBP JPY on Friday, and I think this is why I got confused. So if you look at this level over here, it acted as a level of support. The market broke above that. The retail traders all got basically killed with that move where they thought the market was going to break support. They tested it as resistance, break above resistance, tested it as support, and then potentially continue to the upside to go and fill in that liquidity that we have over here. The move to the upside is still highly expected for the Euro JPY because we can see here from a daily perspective, the market is still trading in bullish territory here as well. If you go on the 4-hour time frame, you can see this is more of the liquidity that I was speaking about in this move here. So that is what I would potentially have loved to see in this market over here. But one thing I've also realized with this pair is basically it's because the market is trading like sideways. So you always expect the market to come and test these lows before you expect to move to the upside. But if you look at just the technical perspective, I do expect this market as base of where we are now. Firstly, we can see that we are still trading here in bullish territory, so we could potentially see this market continue higher. Alternatively, if we do get a clear break and close, you can see these are all liquidity candles over here that the market printed. A clear break below that level will make room for the market to just go, because as you can see, the market is stuck within a consolidation phase, and I will draw it for you. I can sometimes sometimes it's just like that. And there we go, because if you look left over here, you can see that this level over here is basically the range that I am referring to, that the market is stuck in between. So I was expecting this market to continue the range to the downside. Alternatively, I would just say just be very careful when you make a trading decision. Similar price action we have over here, but we can see this market obviously already went back to touch that previous level of resistance, and you can kind of see exactly why I was looking for that selling opportunities. Again, yeah, I would say we could potentially see this move to the downside take place once again, but alternatively, my throat. Sorry about that, good friends. So this is basically expected from a technical perspective, right? Because if you trade a range, then this is what you would be looking to trade. So alternatively, a clear break above that would make room for the market to continue higher. The best advice I can give you is to just go look at the price action and start looking for selling opportunities within those time frames there as well. Now, my good friends, that is it from my side. Please enjoy the rest of your weekend. Thank you for your time. And as always, cheers for years.